Good day, all. Ira Epstein of Linn Associates with your metals market update for this Monday, and we're at April 8th, 2019, just after 3:30 p.m. Central Daylight Time. A beautiful day in Chicago. Two games going, baseball, Sox and the Cubs. 70 degrees outside. Of course, we're going to drop down back into the 30s by midweek, but what can I tell you? That's like trading the markets. We've had a nice rally all of a sudden in most of the metal markets today. A very quiet day in the stock indices. Dollar index down, which I think gave the little boost to that market. If we take a look at gold, what it's really done is it's corrected on a weekly chart from 1329, got back to the 18-week moving average of closes and sort of stalled out right here. The big question is this enough of a pullback to get the market back into a sort of up mode, or is it going to stall here and resume that downtrend? And that'll be the big question. You can almost see, void of today's action, how the market had come down, and all of a sudden today, the market gives you that uplift on a daily chart. When you come to the swing lines, you broke the downtrend. You had a high with a lower high, a low with a lower low, and if you took out 12.99, you break that pattern, which is what you did today. Then you put on the moving averages and you can see where the market stopped. I laugh because what I teach is the first challenge of the 18-day average is often a zone that the bottom pickers might be trying to come out at. That number was 1306. You got to 1307.90. You're back to 1302 as I'm doing this. And what you right now have is you have a resistance point at the 18-day average, support at the 100, and the market sort of working back and forth is my guess in there. You did stretch yourself out last Thursday to the lower Bollinger Band, and now you've come back to that 18-day average of closes. As I said, when 12.99 was taken out, you negated the downtrend, and momentum is trying its darn best to turn up. So the first close over the 18-day average, all it'll do is give it upside bias. There's nothing on the current chart pattern that can set you up for higher lows, higher highs, or lower highs, lower lows. You're sort of in the middle of nowhere on that. When we come to GLD, you can see what this market had done. You had come down on Friday to the lower Bollinger Band and the 100-day average of closes. As I teach charting, that's where I think the pros, first major supports, would be coming out of shorts. I am not saying they'd buy there. There's a difference between coming out of a short and that. If you rally, I'll look for the resistance. If you can now follow through, you've already taken out this previous high, back to the 123.04 zone, which is the 18-day average of closes. 123.01 is what the number slipped down to today. That's the 18-day average, and if you look with me right here, that was the high of the day. Remember, moving averages a look at the current price if you have a live chart. In GDX, you ended the downtrend Friday as well with this move back to the upside. Got up as high as 2254, 2253. See that number? Was the 18-day average of closes. And today what the market's doing is it's trying to extend a bit. The common element here is none are in an uptrend, but they're all out of downtrends. That's the important thing. Now, for the first time in a while, and it's been since back here in March, the market is putting back the idea that silver is gaining on gold. It's pulled back to the 18-day average of closes of 85.68. That's 85.6 ounces roughly that you'd need of silver in a perfect world to give somebody that silver, and they'd give you an ounce of gold without commissions, without any other fees. But that's the theory of that. When you look at silver, let's take a look at what the market did on Friday. If you look at the number, 1518 was Friday's high. It took out the 1516 level. So on Friday, the market negated the trend that had in place of lower highs, lower lows. It kept hitting the lower Bollinger Band and couldn't push that out in an oversold condition. If you rally, I would look then for the combination of the 18-day average in red, the 1525.50 level to 1529.5, the 100-day average to be the first resistance. The market made it today to the 18-day. Now we'll see if it can make it to the 100. Again, you're not trending, but you're not trending down anymore. You're now in a market that's gone neutral. In the copper market, it's sort of the same thing. You've got the pattern of lower highs and lower lows, but you're refusing to put the bias down. When I say you, I mean the market. It's not closing under the 18-day average of closes. If we take a look at Friday's close, the market was 289.45, just under that 18-day average. That was the day that it had everything pointing down, just this past day or two. And now the market's coming up and putting the bears in trouble. If the market gets over 295.30, what it does is it negates the downtrend, does not start an uptrend because you have the lower low, and the resistance will be at the 295.95 area, the upper Bollinger Band, which could slip a little tonight. A chart with a lot of divergence. You're trying to turn momentum up, the swing line down, bias up. In the platinum market, we now have 3 days in a row over the upper Bollinger Band, which gives me then, my rule of thumb is each consecutive day over that number, the upper band or the lower, takes away 1 of the percentage points of the 5% of the time the market will stay over or under the band. It also tells you that this market's gotten very strong. I mean, it does several things. I do think that the first time you hit a band, pros come out of the market. So this part of the market they might not be in. That's okay. I think that part of this unwinding is against the palladium market right through here, which has been in a downtrend while platinum has been in the uptrend. So major spread unwinding. Last in the dollar index, just sort of drifting around right here. If the market loses its embedded reading, which would happen if the red line closes under 80, then I would look for price and the 18-day average to come together. Is there a trend here? No. You've got a higher high and a lower low. You're sort of just this way in the market, not able to put together a sustained move. You had one here that, as I said a long time ago, you had an outside day down, and when you take that out, it normally goes to the 18-day average, but now you've sort of, if you will, damaged the idea of where's the higher lows, higher highs, and the whole thing went crazy. And that happens on the patterns. I've seen it year after year. And what I do is, you don't have to be in a dollar index. It's that simple. There's other vehicles to trade. I wrote today my special report on stock indices. Now, if you go to our website, www.iraepstein.com, and you go under research, you're going to see a drop-down menu, and you'll see the stock indice report. Just click on it, put in your information, and it'll play right then and there. It's a video report. I've included the seasonals for you, the weekly charts, the daily charts, and where I think the momentum and how this market's wrapping itself up. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.